Most people, when they hear about the prop firms online like FTMO, 5%ers, or Top Step Trader, or whatever, they think about getting funded, and that's their goal. And that's all fine. That's the start of a process. But then how do you go about keeping your account with the broker? How do you go about scaling up and moving forward? Well, we'll cover that in today's video, of course. What's up, traders? Welcome back to Bangkok in Thailand. Today I want to share with you how to keep your funded trading account. Let's say you've been funded by a prop firm online or offline, whatever that is, or even maybe an investor. How do you go about keeping your account so that first of all you grow your money, but you don't lose any money in your account and you keep moving forward? Because one big deal is, let's say you get funded like with $20,000 or $50,000, and 1 week from now you lose it because you don't respect the rules or because you make a mistake. That would be really bad. So we want to teach you to do things the right way so you can keep your account and continue to move forward. The first thing you gotta do is you gotta practice proper risk management. And that means that your prop firm that you trade for or your investor will have limits, will have rules you have to follow about the risk management, where you can't lose more than this on a daily basis or on a monthly basis or overall. A lot of the prop firms out there, they have a maximum drawdown of 10% for their whole account. If you lose more than 10%, then you're out and that's it, then you're done. And people say, well, they're too severe. Well, no, they're not too severe because they have some rules to follow. If they don't follow the rules, they lose money. And then if they lose money, they cannot get more clients. So you gotta respect the rules. And let's say that means that they have a maximum drawdown daily or weekly or monthly or whatever. You gotta make sure that your risk per trade is much lower than that. And that you have enough room for a more than historical drawdown. So let's say your historical drawdown is 14% or 14 trades in a row, and the maximum is 10% that you can lose to the prop firm. Then you got to reduce that to, let's say, maybe risking 0.5% per trade. So your maximum drawdown will be 7%, and you still have 3% of margin to go where if your drawdown was to be bigger, you will still be fine. Or that could be something, even you go lower if you want to be more comfortable. Those are all things that you have to think about first before you go to the prop firm. Once you've completed the challenge of the prop firm, to be able to keep the money long term. The second thing is you got to be on top of the news. And many prop firms online, they don't allow you to trade the news. They want you to exit before the news because news can have spikes. And especially with their platform, even if you want to be allowed to trade the news, there could be a spike and it could be stepped out right there in the news. And so more than ever, I don't really recommend to always follow the news and trade the news, but I think if you trade for prop firms, you're going to take an extra caution to be even more careful than you will be before normally because they have more rules. You got to make sure you put everything in place to ensure you keep the capital. So that could be something to add to be even extra cautious and to keep an eye on the news, not be stepped out, not be triggered or whatever else could happen. And along with that, point number 3, leave some extra room for slippage because the fact that you might be used to one broker, they might be really, really good in the news, and then you get to this broker with that prop firm, which is different, and then you get stepped out before news or any other time because there's a big slippage in the market. So spread is usually this much, like 1 pip or 2 pip, but then it goes to 15 pip on the pair. That could happen, and then you get stepped out. So again, you gotta leave for extra room for slippage, and it's just a good practice overall to, in any kind of trading, for yourself, a prop firm, for anyone, to at least have a little bit of room for slippage. You cannot put your stop loss like straight at the top or straight at the bottom. In stocks you could do that, but in Forex some spread, some slippage could happen and you don't want to be stepped out with that. You don't want to be in a trade where you get stepped out but you were right and price goes in your direction just after you get stepped out. That's not something you want to happen too often. So definitely leave some room for slippage. So I really hope you're enjoying this video so far. My hope with this channel is to be able to help as many traders as I can throughout these videos, throughout these interviews I do with traders on all topics, throughout these small videos I do that are shorter on how you can kind of get breakthroughs and move forward in trading, and through the motivational videos we do for getting you pumped up and ready for the weekend trading. Now I want to make sure that this video reach a lot of people and that it actually reaches people that need to see these things and need to come across these videos. And for that, I would love you to first of all like the video, click the like button below, and also subscribe if you've not been subscribed yet to the channel. That's going to allow you to get more notifications for videos, and also it's going to increase the view we get in videos so that other people can see them and learn from them and actually get results. There are things we talk about here on the channel that need to be heard and they need to be coming across the right people, and I really hope you can help me do this. Also, you can click the bell next to the subscribe button to be notified of future videos. And obviously let me know if I can help in any way in the comment section. Now back to the video. Point number 4 is you want to have some consistent targets and stop losses, in the sense that you cannot modify your targets because you feel like it, or you cannot change your stop loss because you feel like, oh, it's going to go back in my direction. That won't work. But also because of the fact that prop firms love to have consistent gains and small consistent losses. If they see you having like a big giant win one month, they might kind of ring the bell and say, well, that's not really kind of a consistent trader. Maybe you made a mistake and that's why it's profitable, or maybe you had a big trade that you gambled on and you succeeded. So they're not sure about whether you'll be doing it again the next month. It's better to have consistent wins that are smaller, with even smaller losses that are consistent also, that you don't modify all the time. You don't modify your stop loss, you don't move it too far, you don't change your take profit, you don't take your profit early. What if you have like a few profits and then a lot of small tiny profits and then some fairly medium losses? Not good, right? Because then it's likely that you're taking your profits too early, meaning that your mindset is not good, and your stop losses are not changing, they're bigger. So prop firms won't like this. And I believe for a lot of them, even though you respect the rules at first, they might investigate a little bit, try to see what you're doing. And especially if it's an investor or a private prop firm, that is where you work at, where they have a risk manager and everything to support you, they might look at that. They might say, well, that's not really good. That's something that we cannot accept or try to do. And they might send you on a way to improve yourself or do something different to come back and be able to trade with them. So you want to be careful with these things. And let me say that again. It's much better to have consistent win and smaller consistent losses than to have things that vary all the time, bigger losses, bigger wins, small win, big loss, small win. It's not what you want to have. Finally, my last point number 5 for this video is know the rules. Many prop firms, when you read the whole rules on the website and they have Q&As, FAQs, everything around, you can know these rules easily, but you gotta take the time to read them. When you read these rules, you're gonna find out that some things change before the challenge, during the challenge, and after the challenge. Like they have these rules where they drop for the challenge, and after that you have to respect them. For example, with FTMO, they have a rule that takes place after the challenge where you have to close your trades before the weekend. Or they have this rule that all the times are in CET time zone, the time zone in Europe. So if you're abroad somewhere else and you take your time into account, like you look at a daily drawdown but it's in your time zone, you might be screwed up. You might have made a mistake because they calculate the daily drawdown with their time zone. So you want to know those things before you go in and before you trade for the prop firm. All it takes is to read on the website to be able to familiarize yourself with all the rules. And if you have any question, more importantly than ever, you gotta ask prop firm how things work, and you gotta ask your questions. Otherwise, you're gonna be stuck, and that could be costing you a lot of money in the future. So it's really important to go through these things. Practice good risk management was the first one. Being on top of the news was the second one. Leaving room for slippage, the third one. Consistent target and exit, the fourth one. And knowing the rules, of course, the fifth one. So leave a comment below if you have any other tip for prop firm traders, what they should do to keep their account. If you like these tips, leave me a comment below as well. I want to hear your thoughts about this video. In case you're not aware already, we launched a course a few days ago for people that want to get funded by prop firms online, by FTMO, 5%ers, or other prop firm. And this course is designed for people that want to be able to multiply their capital by at least 50. Then we'll get to 100,000, 500,000 in the next few months. And we help people get funded. We coach them. We have mastermind calls every few weeks. We have a program for that, many modules. And there's no other program like it out there. So if you want to check it out, I'll leave a link below. We did a webinar a few days ago. We did a free training. I did a free training a few days ago about this topic. So I'll leave a link below for that in the video description. Check it out. And if you want to sign up for the program after the course, then you're going to be able to do that as well. And I sincerely hope to be able to help you get capital in the next few months and for you to be able to eventually go to your job, go full time and trade for a living. All that's in the description. And I'll catch you back here for the next video pretty soon. Ciao.